channel, guys. My name is Jess. So over the last week, Bitcoin has not really been able to catch a break, but just as the 3-day Ichimoku starts to print a warning sign, we finally get news that the German wallet responsible for the recent selling spree is at last out of Bitcoin. Is this the point that we finally see a mass reaccumulation in the crypto market? Let's go ahead and take a look at the macro charts, the daily structures, and the short-time frame resistances, as well as total cryptocurrency market cap and Bitcoin dominance. Before we do though, make sure you guys like and subscribe to the channel down below to get regular Bitcoin analysis every Monday, Wednesday, and Saturday, and ring that notification button so you never miss an episode. If you're after even more content, be sure to check out my free Telegram channel for daily Bitcoin updates as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trade setups with exact entry points, targets, and stop losses. And we are having a sale right now, so you can get 15 to 30% off all the membership options by messaging me in Telegram. Alrighty guys, so diving right into the daily chart here, we can see that overall in the last week of price action, there really hasn't been all that much change. We're still very much below this level of resistance here at 58,300. And, you know, on the short time frame though, we can see the buyers trying to step in and take control of the narrative on the short time frame. We are trending upwards overall in that short time frame, this little segment of price action. We've got higher lows over here, and we've had two really strong attempts to break above that level of resistance. One of the wicks even went all the way up to 59,600. So we are seeing a little bit of strength on the short time frame. It just has not been enough, right? None of these breakouts have been able to be sustained. They've just, you know, rapidly gone back downwards. We've closed below the resistance 2 times now. But the good thing is, despite those moves, you know, back down, those rejections, we're still overall in that uptrend. Our high time frame structure is still valid as well, so we've continued to validate that by maintaining above this lower trend line on the bull flag pattern over here. So that's also really good. And like I said in my last video, while we're below 58,300 but above 53.3, we're somewhat in a neutral territory, right? We're not necessarily looking good, right? We're not seeing any sign of strength really, because we're below that key level of resistance, that bullish trigger point, but we're not necessarily looking bad either. We're not at a severe risk of any sort of larger correction downwards or anything like that, but we are running out of a little bit of time, and I say that because of the Ichimoku cloud on the 3-day chart. So let's jump into our analysis and let's go ahead and talk about that, and then dive into our short-term frame analysis and go over the broader market. Before we get into any more analysis, guys, let's hear a quick word from our sponsor, Bitunix. Bitunix is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 US in sign-up rewards and get 15% off all of your trading fees by signing up using the link in my bio or by using the code 1GG3 when you create your account. So the Ichimoku cloud on a 3-day chart has historically been a really great indicator for representing the levels of key support that we have on the higher time frame charts. It's great for marking the bottom a lot of the times, not so much the top, but overall it is really great at showing us where these key levels are that we need to hold and bounce on before otherwise seeing a much larger correction. So generally above the Ichimoku cloud, we are to some degree in a bullish trajectory, in an uptrend, even if that trend line isn't strictly drawable using a straight line. And below the trend line, or below the cloud, we generally see anywhere between a 15 to 70% correction, which is absolutely huge. And the reason why I bring this up today is because we are about 20 hours away from getting our next 3-day candle close, and we are really at that critical stage now where we haven't got that much more bearish room, right? We've got very little room to move here, anywhere below $56,200, below the leading span B, sorry, that red line at the bottom of the cloud here. We're at risk of closing that candle below that cloud, and like I said, seeing that much larger correction. So let me go ahead and show you guys some examples just so I can justify my analysis here, and we'll start off by going to 2021 the bull market all the way back then. So let's go ahead and take a look. So this was, you know, obviously a really interesting period of time. Where am I? Oh, yeah, okay, this was obviously a really interesting cycle, purely because technically we should have topped here, but we just saw a massive amount of deviation. It's a really beautiful example of, I guess, inertia and irrational investor behavior, but essentially it still shows us what we kind of need to see on the 3-day chart when it comes to the Ichimoku cloud. So over here, we fell below the cloud. And even though we didn't enter an extensive bear market because, like I said, we ended up getting that second deviation rally. We can see on the RSI we had a massive amount of bearish divergence. So we should have topped out over here. Doesn't really matter though. We fell below the Ichimoku cloud here and we saw a huge, let's ignore that first wick. Let's go to this one over here, this candle close. We saw a 20% correction downwards, right? So that is pretty massive. And going back above the cloud here is when we had another massive rally to $69,000. And that was another nearly 50%, 44%. Okay, and then falling below the cloud over here, after we topped out for real and entered the bull market for real below this cloud here, that is when we saw a huge 70% correction. I think it was 70%. Let's go to the close, 65 to the close, and 66 to the candle wick. So another huge correction. And in 2021, we don't really get many examples of the Ichimoku cloud acting as a great level of support, but that is purely because of just honestly the uniqueness of this cycle. It was a really, really strong bull market. We rallied really, really hard. We were very far away from the cloud. If we pull up the Bollinger Bands, you can see a huge amount of volatility during this period. But historically, it has acted as a really, really strong level of support. So I'll go over to 2017 and give you guys some examples of that. So in the 2017 cycle or bull run, we actually tested the Ichimoku cloud very many times. So over here, this is an easiest example. It pops out in the middle of the chart. We tested the cloud, and you know, this was after a fair bit of movement downwards. If we take a look at that little segment of price action, it was 1, 2, 3, 4, 5, 6, 7. So about 1 month of price action, and the price fell about 31.5%, right? So it was a pretty big correction downwards, but upon bouncing on the Ichimoku cloud, we continued rallying, and it continued rallying for about 2,000%, right? It went all the way up to $18,000 for the first time in, you know, that specific period of history. And again, we had another very large correction over here, right? We technically topped out, but upon bouncing on the Ichimoku cloud, we had another really small rally over here of about 90%. Okay, so not as large as 2,000, but still quite a lot of movement there upon bouncing on the cloud. All the way back here, we see, you know, a large period of stagnation, very little price action, very little volatility, like very little movement in general. But upon bouncing on the Ichimoku cloud, we go up to rally another 130% before, you know, topping out and moving back down to retest the cloud. So you guys get the gist. It does historically act as a really strong level of support, and moving below the cloud over here, falling below that red line, the leading span B, we had another massive correction of about 71%. Okay, so we're at that period right now, guys. So if we go over to our current level of price action, you know, we are currently at that period where we either see a replication of what happened in the segment over here at $25,000, where a lot of people had started to really flip bearish. You know, we can see the price kind of stagnate a little bit, traveling just sideways. We were retesting the Ichimoku cloud. And upon bouncing, that is when we had that massive rally all the way up to $73,000. Okay, so we're either at this point, we're at that decisive moment where, you know, after testing the cloud, after getting those candle wicks below, we either break out and get that extensive rally that is suggestive of the cloud, or we fall below and we get anywhere between a 15 to 70% correction. So a 15% correction from the bottom of the leading span B over here at $56,000 would essentially take us around our next level of support here at between 46 and 48. So let's just draw that in. Go to 56,000. 15% correction, yeah, it takes us right into that next really key level of support. 48K, I'm sure you guys know, is that really, really huge psychological level as well. If we zoom way out and take a look at the VIPV, we do have a massive peak in the volume profile as well there. Okay, and falling below 15%, if we take that 15% from the bearish trigger we have on the short time frame charts at 53,300, that takes us around this next key level down here at $44,000, right? Another huge level of support over here. So that is realistically the worst case scenario as of right now, right? But we do have some time, okay? So if we go back to the BLX chart, we can see that overall, the cloud does stay relatively parallel and straight until the September period. So even if we continue rejecting from 58,000 and we remain above this level, it's not looking terrible. It's not looking great, but it's not looking terrible. It's only around this September period that the cloud starts moving upwards and we start to see some real risk of falling below and getting that larger correction if we don't make a bullish move before then. So that's obviously the bad news, guys. The bad news is that doomsday isn't that far away. We do, have a little bit of pressure here. We should hopefully start to see a little bit more bullish price action. But the good news is that, the cause of this massive amount of bearish price action in this I want to say at least the last couple of weeks period, because we had a lot of fear selling because of Mt. Gox, and then we had Germany literally obliterating the market. So the last 4 weeks of price action, but more realistically, the last, week and a half to 2 weeks of price action, this super duper negative, massive bearish move that, checked all the warning boxes. The cause of that, Germany, whoever in Germany, the Germany official government who is selling all that amount of Bitcoin, has finally exhausted their ability to sell. They have no more Bitcoin left. I think Cointelegraph verified it this morning. We had the news on CoinDesk yesterday that they only had a little bit left. So I think we are seeing the end of that massive amount of external pressure that we had there that was really suppressing the price downwards. So like I said, on the short time frame, the fact that we are, gaining that little bit of strength now at this stage when we've kind of exhausted this external selling pressure is a really good sign. So hopefully we get that turnaround very soon. So let's go ahead and dive into the short time frame analysis. So moving over onto the 12-hour time frame, realistically what I said at the start of the video about $58.3 thousand, that key level of resistance, that is honestly, if you're going to take away anything from the short time frame analysis, it's going to be that. Getting a daily candle close above that level, if we move over onto the daily chart really quickly, and doing, what we have unsuccessfully been able to do so far. So closing above that level, maintaining that level for the close should trigger a move to fill this gap in the volume profile and send us to this next key level here between $60,000 and $61,000, right? It's that key level of support that took us through the last 4 months of sideways price action, and those retests of $72,000. So that is a really key level of support to establish. So upon moving there, that is what we're looking to do. But on the 12-hour time frame, we can see that if we pull up the RSI, we've actually recently had a massive shift in momentum over here, in bullish momentum. So what we're essentially seeing is that the recent increase in buying pressure has been enough to kind of break out of this corresponding downtrend that we have here on the 12-hour chart. And it's one of the early signs, right? RSI is a leading indicator. It's a momentum indicator. One of the leading signs that we should be expecting, or if we manage to clear this horizontal level, because we need, horizontal confirmation, that we should be seeing that breakout soon. So that is really good to see, guys, because it confirms once again that if we do manage to get that daily candle close, it is very likely that we are able to break out of this downtrend over here, sustain a break out of that downtrend, and move to these next levels here, right? And properly establish a new short time frame uptrend, which is great to see after all that recent price action. So in that move, like I said just before, we have our very first bullish target that is $60,000 to $61,000. But our main bullish target in terms of a full-on reversal is getting that next level right above 60 at 63,000. We can see the peak in the VIPV as well over there, and we have a great example of that in the previous price action. Every single time that we get that bounce around that 63k level, we do move up to test the upper levels of resistance at around $72,000. We see it over here, break above 63, 72, 63, 70, 63, 72, 63, 72, right? And falling below that 63k level, that is when we lost 60,000. We moved all the way to that lower level of support here and continued in that much lower trajectory. So it was about a 7% correction there. So that's our key bullish target in terms of quite a aggressive reversal back upwards. But as of right now, the main level that we're really looking for is that 58.3k level. That daily candle close there is what we're trying to establish. In terms of support, the only real support that we have right now is this $53,000 level, the sell side liquidity level all the way down here. That's our main bearish trigger. Like I said, this is that neutral zone. So if we fall below 53, again, it's very likely we get that 3-day candle close on the BLX chart below the Ichimoku cloud, because we're already below 56,000 if we flush below 53. And potentially moving to that next key level of support there at $48,000 to $46,000. If we zoom in a little bit more onto the shorter time frame charts, we can pull up the liquidity swings indicator. So that gives us a little bit higher of a target there. So it's showing us that we have two main higher lows here. So we first establish a bearish trajectory falling below this higher low down here, this liquidity level at 54K, 54.2 specifically. So going below there, we'll see 53, 53.3, and you know, that's when we get that bearish trigger to the downside. But as of right now, we are still very much within that level of support, still above the level of support and going in for those retests over here. Overall, it's looking pretty strong. It's not looking amazing, but it is looking pretty strong. We can see these rejections from our resistance zone have resulted in these higher lows here. So there's signs of bearish exhaustion at this sell wall, and the buyers are stepping in at an earlier price to absorb all of that selling pressure, which is again a sign of short time frame strength. We should be seeing that reversal soon, all based on that candle close though. So that's the main thing we're looking for on the short time frame charts. Now let's move over onto total 3, because like I said, we are 20 hours away from that 3-day candle close, and there is something really important there that I want to show you guys. Alright guys, so we're going over onto total 3 on a 3-day time frame, and just like the BLX chart, obviously we are about 19 to 20 hours away from the candle close for the 3-day time frame. And the reason why this next candle close is so important is if we take a look at the RSI, we can see that we are retesting that 4-month-long downtrend that we've had on total altcoin market cap for the first time in a good couple of weeks now. And so if we manage to get this daily candle close even at or optimistically above the uptrend, we are starting to see, you know, the very first sign of strength that we've had for altcoins for a little bit now, right? Altcoins really got wrecked in the most recent 2 weeks of price action. We saw it drop below what I conceptualize as the bull market, bear market threshold over here at 565 to 575 billion. Over here, we saw a lot of altcoins retest. Some of them retested all-time lows, or not retested, but tested all-time lows. Some of them retested really old levels, like 2021 levels, which, considering how well off we started that 4-month period, was quite sad to see, quite shocking to see, really. So yeah, we've bounced from there really well. We're going back up. We're retesting the bull market, bear market threshold here at 575. We're seeing the RSI retest this really key momentum downtrend over here. So things are looking all right. And what we really want to see is, upon breaking this RSI downtrend, a break above this threshold at 575, that red box over here, and a move back above the 150-day SMA, right? Historically, the key level that has represented the altcoin bull market in the past. We've never fallen below that in prior cycles. And a breakout of our corresponding descending channel / bull flag pattern. So in that breakout, the first level that we're looking to clear is this trigger point at 715 billion, right? The parabolic trigger point, and that key level of resistance there, where in the measured move of the bull flag, we go all the way up to 808 billion, which would represent all-time highs for a lot of altcoins and good stuff. But the first thing we need to see is that move above our current bull bear threshold, this red line over here, and getting that RSI candle close on the 3-day chart, even at that retesting that downtrend, and, you know, optimistically above that uptrend, above that downtrend, is a really great start, guys. So definitely something to be looking out for over the next couple of days. If we do close above that RSI, it is a great sign that people are generally starting to reaccumulate enough altcoins to make an actual difference in terms of the macro trajectory of the crypto market for right now. Alrighty guys, that is all the analysis that I have for you today. If you enjoyed the video or you learned something, don't forget to like and subscribe to the channel down below. And if you're after even more content, be sure to check out my free Telegram channel for daily updates as well as crypto and economic news. If you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trade setups with exact entry points, targets, and stop losses. And if you are a trader, don't forget to sign up down below to Bitunix to get 15% off all of your trading fees and $5,500 in sign-up rewards. Hope you guys have a really great week, and I'll see you next time. Bye.